All right, everyone, get ready for this week. We're taking a deep dive into the world of financial markets. We've got a whole stack of reports here on the commitment to traders, the COT report, for the week ending March 4th, 2025. And let me tell you, things are getting pretty interesting. We've got speculators selling off the US dollar. That's been going on for 7 weeks straight now. Plus, we're seeing a major sell-off in commodities. And that's likely because of, all the global jitters and some of those unpredictable tariff announcements we've been hearing.
Yeah.
To help us really understand what's happening underneath the surface, we've got our expert on all things market dynamics.
It's great to be here.
So, the COT report, can you kind of give us like a quick breakdown? What is it? What makes it so valuable?
Yeah, so the COT report, it's kind of like a sneak peek behind the curtain, in the financial world. It's tracking all the positions held by the different types of traders out there. So that's your hedge funds, producers, long-term investors. It basically gives us a sense of who's betting on what. What we're going to focus on today are the moves made by the speculators, those big players, mainly hedge funds, who are known to make some pretty swift moves based on, market trends. And their actions can be a really strong indicator of where things might be heading.
Okay, so let's start with the dollar. 7 weeks of selling. I mean, that's got to be a pretty substantial signal, right? What is it that's making these speculators so hesitant about the US dollar?
Yeah, it's definitely significant. What's really eye-catching is the sheer drop in the dollar's long position, down 72% since its peak back in mid-January, which, if you remember, was right before Trump's second inauguration.
So are we maybe seeing a direct correlation with some of his trade policies and this dollar sell-off?
It's certainly a factor, I'd say. The whole America First rhetoric and some of those unpredictable trade moves definitely seem to be making some investors nervous. When you combine that with the overall global volatility we've been seeing lately, it kind of creates a perfect storm for uncertainty. And when investors get uncertain, they tend to pull back from assets that just feel a little bit risky.
That makes sense. So if they're fleeing the dollar, where's all that money going? It can't just vanish.
You're right. Money always flows somewhere. One clear winner in this scenario seems to be the Japanese yen. Its net long position has actually surged to a record high, which suggests that investors are rotating out of the US dollar and into other safe haven currencies, like the yen. We've also seen this recent breakout in the USD exchange rate, which further paints that picture of a declining confidence in the US dollar.
So this all ties back to that global uncertainty you mentioned before, right? It's like everyone's looking for a safe harbor in the middle of a financial storm.
Exactly. And that brings us to what's been happening in the commodity markets, where we're seeing, quite a widespread sell-off.
Yeah, this commodity carnage, as some are calling it. What's at the heart of that? I mean, is this all connected to this same global uncertainty too?
Absolutely. You've got rising volatility across the board, trade tensions, and investors reacting accordingly. We're seeing selling across all commodity sectors. But agriculture seems to be taking a particularly hard hit.
Yeah, I mean, the report highlighted some significant cuts in long positions, really, across the board. It's not just one or two commodities. It's the whole basket. But why is agriculture being hit especially hard? Is it all about this trade war?
I'd say trade tensions are playing a major role for sure. If you take the grains market, for example, China's retaliatory tariffs against the U.S., that's triggered the biggest one-week sell-off of key crops in 2 years. And this tit-for-tat trade war is just creating massive uncertainty. And it has the potential to really disrupt global supply chains.
Because who wants to hold on to a bunch of soybeans if the prices are about to tank because of a trade war? It makes sense that investors are trying to get ahead of that.
Right. It's all about managing risk. And speaking of managing risk, there's actually a pretty fascinating divergence happening in the energy market right now.
Oh, yeah, I was reading about that. We've got WTI crude that's actually seeing some buying. But Brent crude's getting hammered.
Yeah.
Why the difference? I mean, aren't they both just oil?
Well, that's a great question. And it actually highlights a really important point. Not all oil is created equal. WTI and Brent are different grades of crude oil. They're produced in different regions and are subject to different market dynamics. The buying we're seeing in WTI is likely due to something called short covering after a recent price slump. But the fact that Brent crude, which is considered, by many to be the global benchmark, experienced its biggest cut in long positions since last July, well, that suggests some deeper concerns about global demand, particularly in Europe and Asia.
Interesting. So it's not enough to just look at oil as like this monolithic thing. You've got to consider those regional nuances and what's driving demand in different parts of the world.
Exactly. And speaking of nuances, the metals market's showing some pretty intriguing trends as well.
Yeah, I mean, Gold is usually a safe haven in times of volatility, but even that seems to be under pressure. What's going on there?
That's right. We're actually seeing net selling in both gold and copper, despite the fact that their prices have stayed relatively strong.
So even gold, the classic safe haven, it's not immune to this wave of risk aversion. That's a pretty powerful statement about the current market sentiment, isn't it?
It certainly is. What it suggests is that investors are deeply concerned about the broader economic outlook. They're not just looking for short-term protection from volatility. They're actually questioning the fundamentals of the global economy. And when that happens, even gold can lose a little bit of its luster.
Wow, so even the shiniest of metals can tarnish in the face of all this economic uncertainty. That's a pretty striking image. Okay, let's step back from all these, individual markets for a moment and kind of think big picture. What does all this mean for, the average person who's not a Wall Street trader?
Well, these market moves might seem a little abstract, but they can actually have a real impact on everyone's financial lives. The dollar's weakness, for example, can affect everything, from the cost of those imported goods to the value of your investments.
So what you're saying is that even if you're not out there actively trading currencies or commodities, you're still participating in this global financial ecosystem, whether you realize it or not.
Exactly. And that's why it's so important to really understand these market dynamics.
Yeah.
It's not just about making money on Wall Street. It's about understanding the forces that shape the world we live in.
So how can our listener make sense of all of this? How do we navigate this complex and often unpredictable financial landscape? We've thrown a lot of data and analysis at them, but how can they practically apply this knowledge?
Well, for starters, it's important to remember that the COT report, for all its complexities, can be a really valuable tool. It provides a glimpse into the minds of those big players, the ones who are making the biggest bets and driving those market trends.
So we can learn from the pros, so to speak, see what they're doing, understand their reasoning, maybe even anticipate their next move.
Exactly. It's like having a little sneak peek into the playbook of some of the most sophisticated investors in the world.
I like it. A little bit of insider knowledge to help us level the playing field.
Exactly. But it's important to remember that the COT report is just one piece of the puzzle. It's not a crystal ball.
Right, right. We're not giving out stock tips here. It's not going to tell us the future with any certainty, but it does, give us some valuable clues. It's like a weather forecast. It can't tell you exactly when it's going to rain, but it can give you a pretty good idea of whether or not to pack an umbrella.
Precisely. And by combining the insights from the COT report with other forms of analysis, economic data, geopolitical events, industry trends, well, we can develop a more informed and nuanced understanding of the market.
So it's about connecting the dots,
Yeah.
seeing the bigger picture, and using all the information we have to make smarter decisions. And that, my friends, is what this deep dive is all about.
Now, before we go too far, there's one crucial thing to remember about the COT report. The data's always lagging. It reflects positions held as of last Tuesday, not necessarily the current market sentiment.
So it's kind of like looking in the rearview mirror. It tells us where we've been, but not necessarily where we're going.
Exactly. That's why it's so important to use the COT report with other forms of analysis, like real-time market data, news events, and expert commentary.
It's all about triangulation, right?
Yeah.
Getting multiple perspectives to get a clearer picture of that market landscape. Speaking of perspectives, let's zoom out for just a minute. Consider the broader implications of all these market movements.
Yeah.
If this trend, of dollar weakness and commodity volatility continues, what could that mean for global economic growth?
Yeah.
And the future of international trade? These are, some bigger questions that we need to be grappling with.
Right, because it's not just about, numbers on a screen. It's about people's lives, their livelihoods, and the well-being of entire nations.
Exactly. And that's what makes understanding these financial markets so crucial. It's not just about making money, it's about understanding the forces that shape our world.
Yeah.
So how do we make sense of all of this? How can we as individuals navigate this complex and often unpredictable financial landscape?
Well, the COT report can be a really valuable tool. It gives us that glimpse into the minds of those big players, right? The ones who are making the biggest bets and driving all those market trends.
So we can learn from the pros, so to speak,
Mm-hmm.
see what they're doing, understand their reasoning, and maybe even try to anticipate their next move.
Exactly. It's like having a sneak peek into the playbook of some of the most sophisticated investors in the world.
I like it. A little bit of that insider knowledge helps us level the playing field. But before we get, too carried away with our newfound market savvy, there's one crucial thing to remember.
The COT report is just one piece of the puzzle. It's a valuable tool, but it's not a crystal ball.
Right, right. Doesn't tell us the future with any certainty, but it does give us some pretty valuable clues. Like we were saying, like a weather forecast. It can't tell you exactly when it's going to rain, but it can definitely give you an idea of whether you want to pack that umbrella or not.
Precisely. And by combining those insights from the COT report with other forms of analysis, economic data, geopolitical events, industry trends, we can really develop a more informed and nuanced understanding of where the market might be headed.
So it's about connecting the dots, seeing that bigger picture, and using all of the information that's available to us to make smarter decisions. And that, my friends, is what this deep dive is all about.
It's also important to remember that the data in the COT report is always lagging. It only reflects positions held as of the previous Tuesday, not necessarily the current market sentiment.
So it's like looking in the rearview mirror.
Oh,
Tells us where we've been, but not necessarily where we're going.
exactly. And that's why it's so important to use the COT report in conjunction with other forms of analysis, like real-time market data, news events, and expert commentary.
It's all about triangulation, right?
Mhm.
Getting multiple perspectives to get a clearer picture of the market landscape. Speaking of perspectives, let's zoom out for a moment and consider the broader implications of all these market movements.
If this trend of dollar weakness and commodity volatility continues, what could that mean for global economic growth and the future of international trade? These are the bigger questions that, we need to be grappling with.
Right. Because it's not just about numbers on a screen. It's about people's lives, their livelihoods,
Hmm.
and the well-being of entire nations.
Precisely. And that's what makes understanding these financial markets so, so crucial. It's not just about making money. It's about understanding the forces that shape our world.
Well said. So what does all of this mean for our listener?
It means that staying informed is more important than ever. Pay attention to the news, read those financial reports, and don't be afraid to ask questions. Exactly. Knowledge is power, especially in today's complex and ever-changing world. Now, before we sign off, let's leave our listener with one final thought-provoking question to ponder. If this trend of dollar weakness and commodity volatility continues, what could that mean for the global balance of power? Could we see a shift away from the US dollar as the world's reserve currency? And what would the implications of that be? It's a big question, but one worth considering. And on that note, we'll wrap up this deep dive into the COT report for now.
We encourage you to continue exploring these topics and keep an eye on the COT report for further insights.
Until next time, happy investing. That's a really thought-provoking question. It almost feels like the kind of thing that could reshape the entire global landscape.
It absolutely could. The U.S. dollar has, held that position as the world's reserve currency for so long, it's easy to, kind of take it for granted. But if these trends keep going, I mean, we might be on the verge of a major shift in that global balance of power. It's fascinating, but it's also, a little bit intimidating to think about.
Yeah.
Okay, so if we bring it back down to earth a little bit, let's talk about what our listeners can actually do with all this information. I mean, we've covered a lot of ground today. How can they apply this knowledge, to their own financial lives?
Yeah, it's important to remember that the COT report isn't, like some magic formula for predicting the market.
Right. We're not giving out any stock tips or anything like that.
Exactly. But it can be a useful tool for understanding that market sentiment and identifying potential trends. For example, if you see a large and growing net short position in a particular commodity, well, that could be a sign that the market's expecting prices to fall.
So it's like a heads up, a way to kind of gauge the mood of the market and maybe adjust your own investment strategy accordingly.
Exactly. It's about being informed and making those educated decisions. But remember, even the most sophisticated investors out there, they don't always get it right. The market is inherently unpredictable.
Right. It's all about managing risk
Oh.
and making decisions that align with your own financial goals
Mhm.
and your tolerance for volatility. It's not about trying to time the market perfectly or chasing, the latest hot stock tip.
Absolutely. And speaking of, specific markets, let's dig a little deeper into some of the trends that we've been discussing. For instance, that divergence between WTI and Brent crude oil that we
Mm.
talked about earlier, that's particularly intriguing. While short covering might be driving some of the buying in WTI, the fact that Brent long saw such a significant cut, well, it suggests, deeper concerns about global demand, particularly in Europe and Asia.
Yeah, I mean, we were talking about how Brent is often considered, the global benchmark for crude oil. So those cuts in long positions really do stand out,
Exactly. And we've already seen Europe grappling with those high energy costs. So this could potentially, exacerbate that situation.
adding fuel to the fire, so to speak.
Indeed. And then there's the grains market, which is being, heavily impacted by this ongoing trade war. China's retaliatory tariffs on US soybeans and corn, well, that sent shockwaves through the market.
The report mentioned that the sell-off in grains was the biggest in 2 years, which sounds, pretty
It
dramatic.
is significant. The trade war is disrupting global supply chains, creating a lot of uncertainty and potentially driving up prices.
So it's not just about the immediate impact on U.S. farmers, but a potential ripple effect, across that entire global food system.
Exactly. It highlights that interconnected nature of the global economy. These trade tensions don't just impact, one country or one sector. They ripple outwards and
Yeah.
can affect us all.
It really underscores the need to pay attention to what's happening in the world, even if it seems, far removed from our daily lives.
Absolutely. And speaking of seemingly, far removed events, let's circle back to the metals market for a minute and that curious situation with gold.
Yeah, the fact that even gold, the traditional safe haven is being sold off, that's pretty telling.
It certainly is. What it suggests is that investors are really questioning the fundamentals of the global economy.
Yeah.
They're not just looking for a short-term hedge against that volatility.
So even gold can lose its luster when confidence in the system as a whole starts to waver.
Yeah.
I mean, it makes you wonder what would have to happen for people to regain that confidence.
That's the million-dollar question, isn't it? And unfortunately, there's no easy answer. But one thing's clear: staying informed, understanding these global dynamics, it's more crucial than ever.
Right. It's about connecting the dots,
Mm.
seeing that bigger picture, and using all the information we have at our disposal to make those smarter decisions.
Yeah.
And that brings us back to the COT report
Yeah.
and the insights it offers. It's a snapshot of how the big players are positioning themselves. And while it's not a crystal ball, it can definitely give us some valuable clues.
Exactly. And by combining those clues with other forms of analysis, we can start to build a more informed, a more nuanced understanding of where the markets might be headed.
So it's not just about reading those headlines. It's about digging deeper,
Mm.
considering multiple perspectives,
Mm.
developing a more holistic view of that financial landscape.
Precisely. And remember, the COT report, it's just one tool in your toolbox. There are, countless other resources out there from financial news sites to expert commentary that can help you stay informed and make sense of this, this complex and ever-changing world.
It's all about taking ownership of your financial knowledge
Mm.
and empowering yourself to make smart decisions.
Absolutely. And speaking of empowering yourself, let's shift gears for a moment and talk about some practical steps our listeners can take to apply these insights to their own lives.
Okay, I like that. Let's make this actionable.
Yeah.
What are some concrete things our listeners can do to make sense of this information and maybe even use it, to their advantage?
Well, first and foremost, I would encourage everyone to develop a habit of staying informed. That means, reading financial news, following market trends, even listening to, podcasts like this one.
Hey, there's a shameless plug for you, but seriously, it's about actively seeking out information and not just relying on what passively comes your way.
Exactly. And don't be afraid to ask questions. If you don't understand something, seek out explanations. There are tons of resources online, from educational videos to investor forums, that can help you demystify these complex topics.
It's about taking control of your financial literacy and not letting yourself feel overwhelmed by the jargon or the sheer volume of information that's out there.
Right. And remember, investing isn't, just for those Wall Street tycoons. There are ways for, for everyone to participate in the markets, even if you're starting small.
Absolutely. There are so many options available from index funds to robo-advisors that can make investing, accessible
Yeah.
and manageable,
Yeah.
even for beginners.
Exactly. And the key is to, start early, stay consistent,
Yeah.
and focus on that long-term growth rather than trying to get rich quick.
Right. It's about building a solid foundation for your financial future, brick by brick.
Now, another practical step our listeners can take is to really consider their own risk tolerance. Investing always involves some level of risk, and it's important to be honest with yourself about how much risk you're comfortable taking on.
Yeah, it's about finding that right balance, between potential reward and potential loss. Not everyone is, cut out for that high stakes day trading, and that's perfectly fine.
Exactly. And there are plenty of lower risk investment options available, like bonds or real estate,
Yeah.
that can provide a steadier return over time.
So it's about tailoring your investment strategy to your own, individual needs and goals rather than trying to follow a one-size-fits-all approach.
Precisely. And finally, I would emphasize the importance of diversification. Don't put all your eggs in one basket, as the saying goes. Spread your investments across different asset classes, sectors, and geographic regions to reduce your overall risk.
So even if, one part of your portfolio takes a hit, you've got other investments to kind of cushion that blow.
Exactly. Diversification is one of the most powerful tools, that investors have at their disposal. And it's a key ingredient for building a resilient portfolio that can weather those market storms.
I like that. Building a resilient portfolio, just like building a resilient life. It's all about adaptability,
Yeah.
flexibility, and being prepared for the unexpected.
That's a great analogy because at the end of the day, investing isn't just about those numbers on a screen. It's about securing your financial future and creating a life of freedom and possibility.
Well said. And on that note, let's take a quick pause to gather our thoughts, and then we'll come back to wrap up this deep dive into the world of the COT report and explore some final takeaways for our listeners.
Yeah.
All right, so we're back, ready to wrap up our deep dive into the Commitments of Traders report. It's been a wild ride through global markets, from dollar weakness to that commodity carnage and everything in between.
We definitely covered a lot of ground, and I think the main takeaway here is that the financial world is a complex and interconnected system. Events in one corner of the market can have these ripple effects across the globe.
Exactly. It's like a giant game of Jenga. You pull out one block and suddenly that whole tower is teetering, on the brink of collapse.
That's a great way to put it. And the COT report, it gives us this unique glimpse into how those blocks are being moved and manipulated by the big players, right?
Right. It's like having a backstage pass to the financial markets.
Yeah.
Where we can, see those puppet masters pulling the strings.
And while we might not be able to predict exactly when that tower is going to fall, the COT report can give us some valuable clues about which blocks are the most vulnerable.
So it's about being aware of those
Mhm.
vulnerabilities,
Yeah.
right? And making informed decisions about where we want to place our own bet, so to speak.
Exactly. It's about managing risk, diversifying our investments,
Mhm.
and not putting all our eggs in one basket.
Right. And speaking of diversification, let's touch on that, one more time because I think it's such a crucial concept for investors of all levels, really.
Absolutely. Diversification is really the key to building a resilient portfolio that can withstand those market shocks. It's about spreading your investments across different asset classes, sectors, and geographic regions.
So if one part of your portfolio takes a hit, you've got other investments there to kind of cushion the blow. It's like having a financial safety net.
Exactly. And the beauty of diversification is that it doesn't have to be complicated. There are plenty of low-cost index funds and ETFs out there that can help you diversify your portfolio with just a few clicks.
So you don't need to be a Wall Street whiz to
Yeah.
create a well-diversified portfolio. It's all about doing your research, asking questions, and finding the right resources to guide you.
Right. And speaking of resources, let's remind our listeners about some of the key takeaways from our deep dive into the COT report.
Okay, fire away.
Yeah.
What are the top three things our listeners should remember?
Well, first and foremost, remember that the COT report can be a really valuable tool for understanding market sentiment and identifying potential trends.
Like a compass, right?
Yes.
Pointing us in the right direction.
Exactly. But it's important to use it in conjunction with other forms of analysis, such as economic data, news events, industry trends. Don't just rely on the COT report, in isolation.
It's about connecting the dots, seeing the bigger picture. So that's takeaway number two. Use the COT report as part of a broader research strategy.
Exactly. And finally, remember that the market is inherently unpredictable. Even the most, sophisticated investors out there, they get it wrong sometimes.
Yeah, don't beat yourself up if you make a mistake. It's all part of the learning process, right?
Right. And remember that the most important thing is to invest for the long term. Don't get caught up in those short-term fluctuations or try to time the market perfectly.
It's about playing that long game, staying the course, and riding out the inevitable storms.
Exactly. And with a little patience, discipline, and a well-diversified portfolio, you can achieve your financial goals and create a future of freedom and abundance.
Well said. And on that note, we'll wrap up this deep dive into the COT report.
Yeah.
We hope you found it informative, insightful, and maybe even a little bit empowering.
We encourage you to continue exploring these topics. Keep an eye on the COT report and never stop learning.
Until next time, happy investing.